A very warm welcome to one and all. Today, in this video, we will be learning about the basic components of income from salary as a part of taxation 1. Before we move on to what is income from salary, we shall quickly analyze what do you mean by salary. So whenever we say salary, the word comprises of various components. So when I say I am receiving salary, salary might include lot many components like basic salary, my dearness allowance, my house rent allowance, my travel allowances, my commission, the bonus that I receive, or any other allowances and perquisites that are paid by an employer to an employee for a particular service that he or she renders to the particular organization. So in simple terms, salary refers to the monetary amount that an employer pays to an employee on a monthly basis for the service that he or she has rendered to the organization for a particular period of time. Now, when it comes to income tax, the word salary comprises of various components. And for this purpose, the calculation of income from salary includes various components like wages, pension, the annuity that we receive, the gratuity amount that a person receives for his long-term service in the organization, the advance salary that is paid by an employer to an employee, any kind of fee or commission or profit in lieu or an addition to salary that the employer receives. Apart from this, the word salary also includes components like provident fund, wherein we have various categories of provident fund. It also includes leave encashments. It also includes any contributions made by the central government to the employer to employees' pension account. Apart from all these basic components of salary and allowances, one of the major component that comprises as a part of salary is perquisites. So in simple, perquisites are the non-monetary benefit that a particular employer gives to his employees for the services rendered. For example, an employer providing a car facility or an employer providing a bungalow or a villa for a particular employee to stay. All these are benefits provided by the company to a particular employer, but they are not monetary in terms of money. So any kind of benefit that the employer provides the employee, which are non-monetary in nature, will be considered as perquisite, which is a part of your income from salary. So in taxation 1, unit number 3, we are going to see how these single components in salary are put to tax. How is gratuity put to tax? How is perquisite put to tax? How is PF put to tax? How is basic salary put to tax? How is dearness allowance put to tax? So each and every subcomponents of salary, how is it going to be treated and how is it going to be taxed comprises of this module. So hope we all have understood the meaning of salary. Next we shall see what are the features of salary. As we have seen in the definition, it is the amount or a monetary benefit that is paid by an employer to an employee. So therefore salary is called as an employer and employee relationship where the employer is obligated to pay a certain sum of money to the employee on a timely basis for the services rendered. Secondly, when I say salary, it can be either termed as salary or it can also be called as wages, which is paid on a day-to-day basis. Thirdly, it is a voluntary surrender of money. That is what I said is because employer has to voluntarily pay to the employee because the employee has rendered a particular kind of service to the employer. Therefore, the employer is volunteered to pay a particular sum of money called salary. Salary from the former employer, present employer or prospective employer. All these three will be treated as income from salary. That means any salary that I am currently receiving or any salary that I have received in the past and the salary that I am going to receive in the future all are put to tax at a particular period of time. And the fifth component is that salary from more than one employer. How do you treat the salary being received from more than one particular employer? Whatever means you are working, or how many hours in a day you are working, the amount that you receive from an employer is considered to be an income from salary. And the next thing that we have to understand is what is gross salary. Now, gross salary refers to the total amount of salary that a particular individual receives without any deductions. Without any deductions. For example, let's say I earn 60,000 a month. Out of 60,000, PF amount, that is Provident Fund amount, and professional tax amount is deducted on a monthly basis. So when I do not deduct these PF amount and professional tax amount, when I take the gross amount without any deductions, then I call that as gross salary. And salary is taxable on the due date, whichever is earlier. So as in when I receive salary for the entire 12 months in a particular year, I am liable to pay taxes. So these are the features of salary. So now we shall quickly understand what are the format for computation of income from salary. So as I told you, salary is broken up into various components. So here I have displayed you the basic or the simplest format of computation of salary. So we start with basic salary, whatever we earn on a monthly basis. Out of that, how much is my basic salary into 12, and apart from that, whatever fees I receive or commission that I receive, or by the bonuses that I receive from my employer on a monthly basis or on a yearly basis is fully taxable. And the next one is allowances. I can receive various kinds of allowances like travel allowance, dearness allowance, children's education allowance, children's hostel allowance, etc. Now, how these various kinds of allowances are put to tax will be computed as a working note, and then the taxable amount will be written here. Similarly, the next component is perquisite. As I told you, any kind of non-monetary benefit that an employer gives to an employee apart from the cash form is considered to be as perquisites. For example, let's say I provide you a car facility. I am not paying you cash, but I am providing you a car along with a driver. So the company is investing some amount for providing cash, for providing you the car and the driver. So what value of perquisite is put to tax? Again, is computed under the head perquisite. So in simple, perquisite is the non-monetary benefit that an employer pays to an employee, which is a non-monetary form, but again, out of us, but again, some perquisites are taxable. So we will see what are the different types of perquisites and how each type of perquisites are put to tax. And then we have retirement benefits that are paid by the employer to an employee, like pension, gratuity, etc. And how these are put to tax is what we will be seeing under retirement benefits. And at last, any kinds of fee, commission and bonus again that you receive from an employer to an employee is again fully taxable. Now, when I add all these components, I arrive at a total amount called gross salary. Now, why do I call this as gross salary? Because I have not yet deducted any, I have not yet given any deductions. Therefore, I call this as gross salary. After I arrive at gross salary, we will be giving deductions under income from salary under section 16. So as per section 16 of Income Tax Act 1961, there are two major deductions that are available. The first deduction is called entertainment allowance under section 16 subsection 1. So under section 16 subsection 1, I can claim the deduction for entertainment allowance only when I am a government employee. If I am a non-government employee, then no deductions will appear as entertainment allowances. The second standard deduction that is available is professional tax under section 16 subsection 2. I repeat, the second standard deduction that can be claimed under income from salary is professional tax under section 16 subsection 2, which is fixed to 200 rupees per month. So 200 rupees into 12 months in a year gives you 2,400 rupees to be deductible. So once I deduct these components from my gross total salary, I arrive at net salary on which I calculate my tax liability. So now we shall quickly understand what are the allowable deductions under income from salary. So as I've told you earlier, the deductions under income from salary can be claimed under section 16 of Income Tax Act 1961. The first deduction that I can claim under section 16 subsection 1 is my entertainment allowances. As the point to be noted here is it can be deductible only if you are a government employee, and if you are a non-government employee, no deductions will be provided and the entire entertainment allowance will be taxable. The second deductions under section 16 is professional tax, which is fixed to rupees 200 per month. So 200 into 12 months in a year gives you 2,400 rupees. Now apart from these two deductions, the Income Tax Act provides a standard deduction of rupees 50,000, which is fixed for every individual irrespective of the age. So these are the various deductions available. So once you arrive at gross total income, we provide all these deductions and we arrive at net salary on which the tax liability of a particular individual is calculated. Thank you for your valuable time.